Welcome back to the channel, and thank you for spending some of your time with me today. I'm Algabot, and I break down automated trading strategies built for MetaTrader 5 so you can understand exactly how they think. In this video, we're studying an expert advisor called Mitigation Block Continuation. It's a pure price action strategy inspired by ICT concepts, which means it uses no traditional indicators at all. Instead, it reads the raw market through candle structure, swing highs and lows, and a zone known as a mitigation block. By the end, you'll understand how it spots a trend and how it looks to join a continuation. This is educational information only. So what exactly does mitigation block continuation do? At its heart, this expert advisor is a trend continuation strategy. It doesn't try to predict tops and bottoms, and it doesn't rely on a moving average, an oscillator, or any plotted indicator. Every decision comes from the geometry of the candles themselves, where the highs and lows sit, and how the body of each candle closes. The central idea comes from a concept in price action trading called the mitigation block. The thinking goes like this. In a healthy trend, price often makes a shallow pullback that dips into the last opposing candle, and then the trend resumes by breaking structure, closing decisively beyond the recent swing extreme. That shallow pullback can leave behind an area of unfilled orders inside that last opposing candle. Traders refer to this pocket as the mitigation block, and the theory suggests price tends to return to that area before the trend continues. This expert advisor is designed to wait for that return and then join the move, rather than chasing the initial break. Because it works purely from candle structure, it can be applied to many markets, major currency pairs, indices, and metals, and to whatever time frame you attach it to. The look-back window and the waiting period are fully adjustable. Who is this style of approach suited for? It tends to appeal to traders who are patient and who prefer a structured, rules-based method rather than a system that trades constantly. It only acts once per closed bar, it requires confirmation before committing, and it defines its risk in advance. Of course, no approach removes the reality of losing trades. Markets are uncertain, drawdowns happen, and this video is purely educational, not financial advice. Let's walk through the exact logic, step by step, as the expert advisor would process it. Everything happens once per newly closed bar on the chart's time frame, so the strategy never reacts to an unfinished candle. First, the EA tracks market structure. It looks back over a rolling window of bars, set by the SwingLookback parameter, and records the highest high and the lowest low in that window, excluding the bar that just closed. These become the reference swing extremes. Second, it watches for a break of structure. For a bullish setup, the most recent closed candle must close above that prior swing high, and it must close higher than it opened. A genuine directional body close, not just a wick poking through. The mirror applies for a bearish setup, where price closes below the prior swing low with a bearish body. Third, when that break occurs, the strategy identifies the mitigation block. It scans back for the last opposing candle before the impulse. For a bullish break, that's the most recent down closing candle. For a bearish break, the most recent up closing candle. It marks the entire range of that candle, from its high to its low, with the wick included. That full range becomes the block, and the setup is now armed. Fourth, the EA waits for price to return. It will not enter on the breakout bar itself. It counts the bars since arming, and if too many pass, controlled by the ReturnBars parameter, the setup is discarded. The setup is also discarded if price closes straight through the far edge of the block, which signals the idea has failed. Fifth comes confirmation. For a long, price must dip into the block and then close back above its lower edge in the trend direction with a bullish body. When that confirmation appears, the EA enters at market. Finally, risk is defined immediately. The stop loss sits just beyond the far edge of the block, with a small buffer set by the stop buffer percentage. The take profit is placed at a fixed reward-to-risk multiple of that stop distance, defined by the risk-reward parameter. Once in a trade, the EA simply lets the stop and target manage the position. Let's look at the actual MQL5 code that runs inside MetaTrader 5, just as you'd see it in MetaEditor. At the top are the input parameters. SwingLookback sets how many bars back the strategy scans to define the swing high and low. A larger value looks for bigger structural breaks, while a smaller value reacts to shorter swings. ReturnBars is the patience setting. The maximum number of bars the EA will wait for price to come back into the block before it abandons the setup. Stop buffer percent controls how far beyond the block the stop loss is placed, expressed as a fraction of the block's height. Risk-reward is the fixed multiple used to set the target relative to the stop distance. A value of 2 means the target is twice the risk, and lots is simply the fixed position size. Below the inputs is the core signal logic. The two Boolean lines detect the break of structure. The variable boss up is true when the last close is above the prior swing high and the candle closed bullish. Boss down is the bearish mirror. When the setup is armed in the bullish direction, the code checks whether the block was respected, that the bar's low dipped into the block, the close came back inside it, and the candle closed bullish. If that condition holds, the EA reads the current ask price as the entry, computes the stop loss just below the block's low with the buffer, and only proceeds if the risk is positive. It then sets the take profit at the entry plus the reward to risk multiple times the risk and sends a market buy order. The sell side mirrors this exactly. Let's bring this to life on the chart. Watch the sequence unfold from left to right. Early on, price is grinding higher. Notice the highlighted green box. That's our first mitigation block, the full range of the last down closing candle before the move. Just after it, a strong bullish candle closes above the recent swing high, shown by the upper dashed line. That's the break of structure, and it arms a long setup. The strategy does not chase that candle, it waits. Over the next couple of bars, price pulls back and dips down into the green block. Then a bullish candle closes back inside it. That's the confirmation, and at the fourth candle the buy entry appears. The stop loss rests just below the block, and the target sits above at a fixed reward-to-risk distance. Price then continues higher and reaches the take profit around the sixth candle. Now watch the second half of the chart for the mirror image. Price is topped out and begins rolling over. The red box marks our second mitigation block, this time the range of the last up-closing candle. A firm bearish candle then closes below the recent swing low, breaking structure to the downside and arming a short setup. Again, the EA waits. Price rallies back up into the red block, and then a bearish candle closes inside it. Confirmation for the short. The sell entry appears around the 11th candle, with the stop loss just above the block and the target below. Price falls away and reaches take profit near the final candle. Notice how each trade follows the very same rules in opposite directions. Break of structure, mark the block, wait for the return, confirm, and define risk before entering. That brings us to the end of our breakdown of the Mitigation Block Continuation Expert Advisor. We covered how it reads market structure, how it identifies a break of structure and marks the mitigation block, how it patiently waits for price to return and confirm, and how it defines its stop loss and take profit before entering. Hopefully you now have a clear picture of how this pure price action approach thinks. Remember, everything in this video is educational information only, and is not financial advice, a recommendation, or a solicitation to trade. If you found this analysis helpful, please consider liking the video, subscribing for more MetaTrader 5 strategy breakdowns, and leaving a comment with the strategy you'd like me to cover next. You can find more at www.algobot.live. Past performance does not guarantee future results. Trade responsibly.